Yeah, I sure am. I just gotta find
Okay,
the share my screen button and I can go ahead and hit
yep,
it.
I'm giving you permission. Here you go, sir.
Cool. No, it's all good. Guys, I appreciate and make sure that you guys can see my screen okay. Can you see that
Yep, I
one?
can see it.
Okay. So, and guys, like she said, if you got some weather issues, I know the weather is going to be hitting pretty bad and ice storms and all that. So please be careful out there. You got people to take care of. That's important. I'm super excited to talk to you guys today about this. This is one of these products, and I come from even when I was a producer, I was very solution-based selling, and cancer plans were a huge part of my business. My goal with any client was kind of the tripod, right? Some kind of life insurance, some kind of disability, some kind of disability or long-term care, depending on their age, and then some kind of critical illness or cancer plan. That was my trifecta with my clients. But I will tell you that generally this is an overlooked one for many reasons. A lot of people don't understand it, and a lot of people don't really understand where it fits in when you're talking to a client. But take a minute to yourselves and just think about this. Think about your own family. Think about the people that you work with, or even the clients that you work with. How many of them do you know, or even within your own family, that have had a cancer scare or somebody that actually has been diagnosed with cancer? I'll give you a quick story. My friend of 54 years, we met when we were little kids. He's actually my brother-in-law now. Good friend for many, many years. He called me up 3 years ago and he said, "Hey, why don't you and Teresa come over for dinner?" And then when I thought something was weird because it's a Wednesday, right? What the heck are we doing on a Wednesday? You should do that stuff on a weekend or whatever. Well, I knew something was up just because of that. And then he told me, he said, "Hey, I have stage 4 colorectal cancer. What can we do?" And at that point, I didn't know what to say because I've had this discussion with him in the past, but at the point of diagnosis, there's nothing I can do. I mean, that train has left the building. Thank goodness, my brother-in-law, my best friend for a better part of half a century and then some, is in remission now, but he had to take off time from work. His wife had to take off time from work. It was a significant financial burden that probably could have been avoided if I would have pressed it a little bit more and maybe would have had more discussions with them. So I'd encourage you guys, think about your clients when this stuff happens, because it's an important piece here. Mutual of Omaha, guys, look, your clients know Mutual of Omaha. We're not a secret. We have a very solid reputation in the industry, A+ or better financially rated, been around well over 100 years. You have a dedicated team. I don't need to belabor this too much, but it is important for you to know that anytime you're talking to a client, I'd be surprised if you brought up Mutual of Omaha and they didn't know who we were, right? So you can utilize that. And I say this, and here's some verbiage that you can use. Hey, I work in the financial services industry. I work with a lot of different carriers. What I typically do at this point with my friends and family, as well as my clients, is I talk about who has your cancer plan, right? I work with a couple of great carriers like Mutual of Omaha. What have you heard about them? That buys you instant credibility, and it buys you even more trust than maybe you already have because they know us, right? And that's an important piece for you to recognize, that there is a substantial amount of brand loyalty for Mutual of Omaha. So utilize it in your business. Dedicated team, yeah, I got a big sales staff. So anytime you need support or have questions or need illustrations or quotes, or you're unsure about products or whatever, that's exactly what you want. And you'll get a phone number for them here as well. But you have a dedicated team, but you also have Cindy and myself as well. But you also have a management at your group, man. These guys are without a doubt some of the best in the industry. So lean on your managers because they are good, they're experienced, and they know what they're doing. Fast and simple underwriting. Here's a really cool thing. Everything in our critical advantage portfolio falls under simplified underwriting. Some of it will be express and some of it will be simple. I'll tell you the difference here in a little bit, but understand that this product is easy. It's easy. You just got to ask some general health questions for your clients to determine whether or not they qualify. And again, I'm not going to spend too much time on this. I've kind of spent enough time on already. Use our brand recognition with our golf sponsorships. Some of you folks have been around for a while. Mutual of Omaha was on TV. It was Discovery Channel before Discovery Channel was around. 30 years plus. Went away, came back recently on TV again on Saturday mornings. It's 1-5 daytime endings or something like that. So again, our brand is out there. Here's your dedicated team: sales support, sales support, sales support. Guys, I cannot emphasize that number enough. 1-800-693-6083. If you need something directly from Mutual of Omaha, my sales support staff is there for you. Underwriting, and again, you don't have to write these down. This is being recorded, so you guys will get a copy of all this, and these numbers are here. Plus, you have your managers that you can work with as well. Don't be afraid of working with underwriting, all right? Sometimes when you put in an application, regardless of what it is, you'll get a response from underwriting asking for some clarifying questions. If you don't understand that, pick up the phone and call them, right? Our underwriting staff is trained to find a way to issue policies. They don't look for ways to decline it. That's not what we're about. We want to help as many people as possible. So we look for ways that we could possibly write a risk. So don't be afraid of going back and forth with underwriting. iPipeline, that's just an IT number for you. You guys have your own internals for that, but I put that out there anyway. So here's the Critical Advantage portfolio. And I would say that it's probably as robust of a portfolio as you're going to find in the industry. A couple things I want you to think about. And I just brought up these facts out because I thought they were interesting. And there's several of them out there, and I utilize these when I'm talking to my clients as well. But honestly, the question to my clients always is, hey, do you know anybody in your family or friends that's ever been diagnosed with cancer? They're going to say yes. Everybody's been affected by it one way or another. Throw heart attack and stroke in there, it's even more. And then my next question is going to be, how did that affect them? I want them to paint a picture in their mind about what the realities are of what happens when somebody gets that diagnosis. Not just the pain that family is experiencing, but what are the realities of what's going to happen? We'll get into that here in a minute, so you can kind of help them paint a picture. But in their brain, they will already have an idea of how painful that is, right? You want them to live in that space because then they understand that it's something they need to think about and protect. It's not that you're there to hurt them or beat them up and put them in this environment that makes them feel uncomfortable, but you may need to make them look at that situation and understand the realities of it, so you can give them the comfort of, hey, we have something we can do to protect against that, right? And it's very cost efficient and it's easy to do. Let's talk about it. Right. 1 in 2 men, 1 in 3 women will be diagnosed with cancer in their lifetimes. That's crazy to me. And thinking back on my own instance, my own family, I gave you the instance of my brother-in-law, but so is my dad. I have an uncle, and I have several extended family members that have been affected by that one way or the other. I'm sure you have your own story. The second one, in the US, someone has a heart attack every 40 seconds. You guys know we're not healthy. This country is not healthy, and we haven't been healthy for a long time. We seem to be getting back to it. We seem to be a little bit more cognizant about what we're doing with our diet and in terms of physical activity and staying healthy and things like that. Hopefully that's on a reverse trend of what it's been over the past 40 years. But somebody has a heart attack every 40 seconds. What does that do to that family when somebody in there has a heart attack? And again, these are things I want you to think about as you're bringing it up. That's over 800,000 people a year. That's astonishing to me. Then you get the third one there. Over 7 million stroke survivors live in the U.S. 2/3 are currently disabled as a result. 2/3 qualify as being disabled as a result. If any of you have ever known somebody that would apply to Social Security to get a disability benefit, you will know that it is an atrocious process. They have a backlog of 265,000 cases as of like 4 or 5 months ago. On average, the applications for disability are pretty much auto declined, and then you have to reapply. It takes 18 months before you ever see anything. That's a year and a half, right? So keep that in mind when you're working with your clients. 5.7 million people living with Alzheimer's. Man, that's scary, right? So those are just 4 little things that I wanted to share with you. 4 things right there that if this doesn't give you a reason to talk about heart attack, cancer, stroke policies, critical illness, I don't know what does, right? But those are 4 primary drivers, and bringing this stuff up when you're talking to your clients, that's important. They'll appreciate it. A couple other things. Cost. What happens when somebody has heart attack, cancer, stroke? I'll give you an instance of my brother-in-law. My brother-in-law is a defense contractor. His wife works as a civilian engineer on base here where I'm at in Omaha. So what happened to him, right? You start talking about the extended costs when you get one of these diagnoses, right? Transportation, lodging, lost wages or incomes. Here's what happened. We have a great cancer center here in Omaha, without a doubt, but he also had to go up to the Mayo Clinic in Minnesota. So what had happened? Wife had to take off work. He had to miss work. He burned up all his vacation, right? For his chemo treatments, because he was on chemo and radiation and some experimental drugs. Number one, no insurance covers the cost of experimental drugs typically. So we had to find a route to pay for that kind of stuff. Transportation, okay, well, he had to take time off of work, both him and his wife, drive up to the Mayo. They stayed up there for 10 days, I believe it was. Might have been a little bit longer, but about 10 days. What's the cost for that? Now we're eating into retirement money, vacation, and all these other things, because both of them have to take time off. They had to take so much time off for his treatments that his coworkers had to start donating time to him in order to do it, right? Took him 27 months to finally get disability, and it pays a small portion of what he made. A lot of this could have been alleviated if he would have had a heart attack, cancer, or stroke policy, right? Would have gave him a lump sum amount of money that he could utilize to offset a lot of these costs. Lodging, okay, when they went up to the Mayo, they had to stay in a hotel. What does that mean? You're going out to eat, right? All the time. So for 10, 14 days, 3 meals a day, do the math. That's a heavy duty impact. Lost wages, well, he wasn't working and he was burning through his vacation. So you guys can see all this. This is a significant impact to your clients when something like this happens. And they don't think about that, right? Especially they don't think about being out of work and what happens if it's so bad they have to apply for disability, and what if they don't have that, you know, all these things. So having them think about this, about the what ifs, are important. What I would caution you against is don't go overboard with this and scare the hell out of your clients, right? It's easy to do. It's easy to do because you think you're making a hard case. You're not. The easiest thing you can do is tell a story. Use mine. Hell, I'm sure you got some more of your own, but you can use my story. Hey, I know this guy. He actually works for Mutual of Omaha. And describe exactly what I told you, right? It'll paint a picture in your clients' minds about how impactful an event like this is. And hey, maybe this is something we should talk about. Again, so be cognizant about how far you get into this with your client, and make sure that you're understanding about, you don't want to scare the hell out of them, but you want to paint a picture of the realities of it, and then talk about it and show them that, hey, there's something we can do with this. So here's what our portfolio looks like. Under the Critical Advantage umbrella, there are 3 different programs. We have cancer, cancer only, heart attack and stroke, and then critical illness, which combines the best of cancer, heart attack, and stroke, along with a couple other things, right? So what's the main difference between this? Critical illness on the far right-hand side, you get coverage amounts from $10,000 up to $100,000. Issue ages are between 18 and 64. Keep that in mind. For lifetime coverage, 18 to 54 for 10-year, 15-year, 20-year, 30-year, right? Sounds just like term insurance, permanent insurance. Lifetime is permanent, term 10, 15, 20, 30. Okay, cool, we got that. So, but keep in mind the age bands there. Lump sum benefit, 10,000 to 100,000. What does this mean? It means when they're diagnosed with one of the following conditions, we write them a check, lump sum on the spot. Covered conditions for the critical illness. Again, this is the one on the far right-hand side. 100% covered. Internal cancer or malignant melanoma, heart attack, stroke, Alzheimer's, major organ transplant, blindness, paralysis, deafness, kidney failure. 25% is paid off for coronary artery bypass surgery, coronary angioplasty surgery for that. There are optional riders, cash value with this. Very similar to how a life insurance policy generates cash value. I typically don't add that on here because for me, I do that in other places like maybe life insurance or something else. For me, this is not exactly the place to do that because it does add a little bit to the cost. These policies aren't expensive, but at the same time, knowing where the best spot for my premium dollars are when I'm working with a client is important. So again, the one on the far right side, under our Critical Advantage portfolio, is called the Critical Illness Insurance Solution. That is a full-blown thing. It covers everything the cancer and heart attack and stroke one does, plus a few more. All right. That's a very solid one, but keep in mind the limitations. Look at the two on the left-hand side. You have on the far left, cancer insurance, and in the middle column there, heart attack and stroke. Here's the cool thing with them. Issue ages for them, 18 to 89 for lifetime coverage. That's cool. This is where you start talking about people who are post-retirement, that you can help them. For me, anytime I talk to somebody about life insurance and long-term care, I'm talking about this. Because many times, one of these conditions or one of these maladies can trigger 2 of the 6 ADLs that put somebody into a long-term care or an assisted living facility. So why not have this and that? So if you are doing anything with long-term care, this better be a part of what you're talking about. This is a very simple add-on to what a long-term care policy, and to me, they should go hand in hand. Something for you to think about. Let's talk about the cancer solution. Again, issue ages 18 to 89 for lifetime coverage, or 18 to 54 for term coverage, 10-year, 15-year, 20 or 30. Same lump sum benefit, $10,000 to $100,000. Covered conditions, 100% for internal cancer or malignant melanoma. Again, it's got the cash value rider, not something I add. It's just something that you can be cognizant of. And in some instances, it may be a smart thing to do. But again, for me, for premium dollars, I'm doing just the basic policy here. That's what I want for this. In the center column, heart attack and stroke insurance solution. Again, same issue ages as the cancer one, 18 to 89 for lifetime, 18 to 54 for the term. Lump sum benefit, 10,000 to 100,000. Covered conditions, 100% heart attack and stroke, 25% coronary artery bypass surgery, coronary angioplasty. All right. You can combine cancer and heart attack and strokes together, right? And your first question should be, well, Kurt, why the heck would I do that? Why wouldn't I just do critical illness? Well, because of the issue ages. If you have somebody who's over the age of 65, you can't do a full-blown critical illness. So why not do cancer and heart attack and stroke, combine those together, and you can combine those in one application. That's a smart thing to think about with that. The other thing, the reason why we split those apart is if you have somebody who's had cancer in the past 10 years, they do not qualify for the cancer solution, but you can get them the heart attack and stroke. Conversely, if somebody's had a heart attack or stroke in the past 10 years, they're not going to qualify for that, but then get them a cancer policy. You have ways in here for you to utilize them based on your client's health. Right, and we'll get into some more of the underwriting and stuff like that. But again, these 3 products, for me, minimum, I'm talking about cancer with everybody, right? That's, for me, that's the in question. You can pose it as heart attack, cancer, and stroke, but I'm always going to bring that up. Then I'm going to figure out which solution should I be looking at for my client. We'll also get into here in a little bit about how to determine lump sum benefits and things like that. But again, just to keep this pretty straightforward, these are the 3 products, always good ones for you to look at and think about the combinations for those who may be a little bit too old for the full-blown critical illness. Here's how it works. Base benefit is a lump sum payment, meaning upon diagnosis, your client's just going to call into policy owner services. We're going to get some documentation. We're going to write them a check. These things clear out quickly, usually within 5 days, if not sooner. Right. We are really good at paying claims. I would stack our claims folks up against most. I know in most cases, we pay out within 24 to 48 hours. Coverage plans are available for individuals, single parents, or families. That is really cool. Benefits. This is where I'm going to talk about the difference between express underwriting and simplified underwriting. All right. Benefits of $50,000 or less are going to qualify for express underwriting. Express underwriting means we're basing it just on application questions and we're going to pull some data and that's it. That's literally all we're going to do. Benefits above $50,000, their term is simplified, which have the same underwriting criteria as Term Life Express or our IUL Express. Again, our simplified issue. There's no blood draw, there's no urinalysis, there's no physical, there's none of that for any amount in these. Right? Now, if we get questions, especially on the ones that are 50,000 and above, we're going to pull some stuff from some different data sources, right? MIB, IntelliScript, these other things. We're going to pull some stuff. If we get conflicting information, we're going to make a phone call to your client for some clarification. Don't be alarmed at that. That's actually a good thing. It means we want to understand the risk So we're going to reach out to the client and chat with them about what we're seeing and just confirm some information. It's not an inquisition, and you should be happy when that happens because it helps these policies stick and it helps you maintain your persistency, which is a big deal. All right, so keep that in mind. There is a little bit of a difference. You really won't notice it, but there is a difference in between what happens at the $50,000 and below and $50,000 and above. Family history is not a factor. How weird is that? Many companies will look at family history when it comes to things regarding cancer, right? There are, and I think we would, most of us would agree that there can be a genetic predisposition to certain types of cancers, but we don't look at that. We don't look at the family history when we're actually underwriting a client. That's a good deal. Obviously, you got to be health licensed to sell this product. I encourage people that get their life license. I'm like, you got to get your health license, man. You got to. There's too many things that belong in a conversation with your client that if you just have a life license, you're missing out on the whole picture. And you need to do a better job. So you've got to have a health license, but that shouldn't be a big deal with this. But again, just got to be health licensed to sell these products. Now let's talk about what you can do. You can do an individual. You can do an individual parent plus children. You can do a family, 2 adults and children. Regardless of the amount, say if you get $100,000, the children will be limited to $50,000. If you get a lesser amount, meaning if you get a benefit of $20,000, children will never be given higher than $50,000 regardless of the total policy amount. Children are covered through the age of 26 or when they get married, whichever comes first. When they drop off, your policy's premiums will adjust accordingly. Now, this is a question I get all the time. How does this play out if you have, just a family, right? We'll say mom, dad, 2 kids. You have the primary, which is in this case, and just bear with me in this scenario, the primary, which is going to be the, say, the wage earner, if it's the dad, and then you have mom and 2 kids. If dad gets diagnosed, what happens? All right, well, we're going to pay him out the face amount, and we'll just say $50,000, right? Then after we've paid him out that 100%, he will drop off the policy. The benefits or the premiums will be adjusted accordingly. Then mom will become the primary, and then you will have the 2 kids. So it's not like it's a lump sum of $50,000. It's everybody on that plan. If you have a family plan, is covered for that amount. Keep in mind, again, children are limited up to $50,000. That's really cool because there are some plans out there that treat this as there's a pool of money, and upon diagnosis, that entire pool goes away. That's not how we operate. Everybody is giving that face amount. Again, kids are limited up to 50. Super cool. Love it. And here's the other cool thing. When kids turn 26 or when they get married, getting them off of this and onto their own policy, super easy. Super easy. You guys will love it. Again, here's some basic underwriting for our critical illness, right? Here's the stuff we're going to look at. Again, ages, we've already talked about that. How do we treat underwriting? Express underwriting, $10,000 to $50,000. Let's look at the critical illness on the far left-hand side. No family history questions. Cancer look back is 10 years. If they were diagnosed with cancer in the past 10 years, they're not going to be eligible for critical illness. Treatment and testing on cancer is 3 years, right? No recurrent breast tumor cyst questions, no high blood pressure questions, unisex premiums, right? Doesn't matter, male, female, whatever, it doesn't matter. Outcome is going to be issued as a standard or a decline. There are not different underwriting criteria where they could get preferred plus, or things like that. They're either going to be issued standard or it's going to be declined. Now let's look at the cancer and then the heart attack and stroke. Cancer in the middle, same thing. We talked about the age bands, we talked about the amounts. Only 3 health questions for express underwriting, right? 50,000 and below, there's only 3 questions. That's why I'm a big proponent of cancer policies, because they're easy and they're probably one of the most impactful things that you can do with your client. No family history, cancer look back is 10 years, testing look back is 3. What that means is if they were tested for certain types of cancer in the past 3 years and there's a questionable outcome, we're going to have additional questions for that. More than likely, it'll end up being a decline because of that, because if there was a testing, that means there was something that gave them some pause. But again, nothing that says we can't look at that. And if you want to chat about this, or if you want to get a prequel on this, then I'd encourage you, just give me a ring. I'll have you put together some information. We'll send it into underwriting about the scenario that you have and say, hey, is this something that we can get into? Okay, absolutely worth doing. Heart attack and stroke, same kind of thing, just the opposite of the cancer, right? No family history questions. Heart attack and stroke, look back is 10 years. Look back for treatment and testing is 3 years. No high blood pressure questions. That's crazy to me for heart attack and stroke, but we understand what it is we're underwriting and how we're doing it. So we're pretty comfortable in how we design these. And again, these products have been around for an awful long time. So we're comfortable in how our underwriting operates. You guys know Mutual of Omaha, our underwriting doesn't change, right? It really doesn't. I would probably say one of the most consistent insurance companies out there, and we know what we want. We're good at knowing what we want. Our agents know exactly what we want. So you know what you're getting with us, right? You know exactly what our appetite is and what we're looking for. And what I mean by appetite is what Mutual of Omaha is good at. Right? I'm going to show you here in a minute some state-specific guidelines, and always check those out, especially if you're operating in New York and California and Virginia. There are some limitations in different states, and you have to understand that. In this specific example, I'm just showing you Virginia. In Virginia, no cancer rider. What does that mean? It means you can't write a heart attack and stroke and then throw a cancer policy on top of it. Remember, you can combine cancer and heart attack and stroke if you're not doing a full-blown critical illness, right? So look at Virginia, no heart attack and stroke rider. That means if you get them a cancer policy, you have the heart attack and stroke. There's no cash value. There's no term coverage. You have to do lifetime. So again, you can read through these and I'll show you where to find those, but whatever state you're operating in, especially some of the East Coast states and then California, just be cognizant of what you have. We operate there and we sell in New York, we sell in Virginia, we sell all over the place. So for those of you that are in those states, it's still a fantastic product that you can utilize, because if you're in, especially if you're operating in New York, you know how limited you are on choices. There's not many insurance carriers that offer life there, but you can utilize these policies, which is pretty cool. And again, I'll show you where to get to the state guidelines in that, because that's important for you to know. Field underwriting, okay. Do your basics, right? Don't guess at their height and weight. Don't be embarrassed about asking the question. If I were you, and this is what I got really good at over the years, I wasn't always good at it. Many times I would just get the height and weight and then hope for the best, and that's like the worst thing you can do. Anytime you're talking to your client about insurance, you need to have this verbiage in there somewhere, right? It's, hey, what I typically do with my friends and family, as well as my clients at this point, is I'm going to talk to you about your health history. I need you to understand that I need to know everything, even if you think it doesn't matter, and even if it happened so long ago that it shouldn't be a thing. I need to know everything. That way I can present you with the proper options. You got to say that. And I'll ask this question, and I want you guys just to think about it. How many of you think your clients lie to you about their health? And I always get a giggle about that. Your clients don't lie. They don't. You get 1 out of 100 to be a knucklehead with this. But honestly, your clients don't lie to you about their health. They're guilty of omission because it happened so long ago, it didn't matter in their brain. Or this is something that it's not going to make any difference. Or even along the lines of this, which is a bad one too. It's, well, my doctor prescribed this for me, but I chose not to take it. Okay, that's horrible. Anytime your clients say something like that, there's red flags popping up in my head. But again, your clients, I really don't think that they're trying to lie to you. I think they're just guilty of omission because they don't understand the processes. So if you say that little phrase that I told you, where you need to know everything, then no matter what happens, if you come back and it got declined or whatever, it's like, hey, this got declined because of X, Y, and Z. What did we miss together? Make them take some ownership of being honest with you about their health conditions, right? And then you won't ever have to worry about getting a declination. That's a great way to start off a conversation with the client when you're digging in about health. Here's the other thing. Talk about height and weight, obviously, right? Don't guess. Don't guess what their height and weight is. Hey, how tall are you? How much do you weigh? What medications are you on? How long have you been taking those medications? What was it originally prescribed for? If you do that job, they will not work with another broker if they're approached. And here's why. Number one, they don't want to go through that again. Number two, they entrusted you with that conversation and had this conversation and that trust with you already. They're not going to talk to anybody else. They will stick with you for everything because you did a better job and you asked them probing health questions. You're also going to put them in a more positive state because you said, I'm going to be your partner in this and I need to know everything. That's important for you to understand. So don't be afraid of asking the questions. That's an important thing. Easy to do. You can quote from WinFlex mobile apps. I'm telling you, this is the place to go. quotes for sales professionals with Mutual of Omaha, right? Quotes for sales professionals. Just go to that, download it on your phone. You can do all of our simplified issue products. You can do the critical advantage portfolio. You can do all of that. It's awesome. I'm a big fan of doing that on the go on my phone. There's also a way that you can get to the quoting software right on spot, sales professional access, which all of you who are acquainted with us have access to that. And I'll show you that here in a minute. E-apps, right? You can do paper and fax it in if you want to. If you have some of the older folks out there that are not too tech savvy, okay, cool. Yeah, you can do that. That's an option. Policies delivered by email, typically 24 to 48 hours after issue. We issue these things quickly, guys. We really do. Target market, let's talk about this. And at the end of this whole thing, I'll show you SPA and I'll show you some places to go for additional information. A lot of this, right? You can approach people just for this, or you can use it as a complementary sale, right? Whether you're doing life, disability, long-term care, Medicare supplement, at some point, the critical advantage plays a part in that, or should. That should be part of the discussion. Like I said, with me, and anytime I bring up something new, and I always do this to my clients, and I say this for a reason. It's actually called a cornering technique, but it's not meant to put your client at a disadvantage. It's meant for make them think about the scenarios that you're painting and consider some of the solutions you're going to present to issues we either know they have or they don't. Well, I always say, anytime I'm bringing up a different product or a different concept for them, because I'm a big fan of concept and solution-based selling, is, hey, what I typically do, you guys have heard me say this 100 times if you've been on my other presentations. What I typically do at this point in time with my friends and family as well as my clients is I talk to them about X, whatever it is, doesn't matter. You can use that with any darn product or scenario or kind of philosophy that you have out there or solutions, right? What I typically do is I talk to them about heart attack, cancer, and stroke policies, right? Who do you know that's ever had a cancer scare? And then let them talk. Let them describe to you the scenario. Share some of your own stories. Steal mine, steal other people's, right? Well, hey, this is worth getting into because I want to make sure that if something like that should happen to you, what you just described to me doesn't happen, right? It's very affordable and it makes a lot of sense for us to talk about. You want to paint the picture and have the conversation. That's all you're doing. So you're just setting this up as a complimentary sale, but that's a good place to be. But again, you can also approach it as a standalone. I have a lot of people who are super successful that do nothing but sell this. They literally work with agents who don't want to do this, or they literally just approach people just for this, which is super cool. And they're super successful at it because it's easy. It's easy, it's simple. The clients like it because it's easy and simple. Just again, something for you to think about there. 66.5% of bankruptcies in the U.S. result from medical issues. That is frightening, right? That is frightening. You all know what it costs and what the expenses are in the medical industry. They're insane, right? Anybody getting hit with the heavy duty heart attack, cancer, and stroke diagnosis, it's gonna cost. It's gonna cost without a doubt. And it makes me sad to think about, but again, that's why it's important to think about. And this is why when I look back on it, I had several instances to which I could have brought this up again to my friend. I had approached him like, oh, how long has it been? 2 years. So probably 5 years before his diagnosis, I had approached him about this. And he said, nope, I got it covered through work, which he didn't. I should have pressed him to find out for sure. And yeah, I don't really have a family history of that. Come to find out, yeah, he did. And his parents had some issues, so maybe I could have talked to him more about it. And I feel horrible that I didn't press it, but you know what? Can't save everybody, so I try not to beat myself too much, beat myself up too much about it. But I'm sure there's several of you that feel the same way, right? So there's nothing wrong if you have a life client or these other clients. Go back and say, hey, I was thinking about you. Clients love that, and that's absolutely true. Hey, I was thinking about you in this scenario. I actually came across this stuff that I'm working with Mutual of Omaha. Have you ever had anybody in your family, heart attack, cancer, stroke? You're just rolling into the questions a different way and reapproaching a client, re-engaging a client. Nothing wrong with that. If anybody has bills, who the heck doesn't have bills? Everybody has bills, right? Health insurance with deductibles, co-pays. Yeah, everybody's got that. If they have a job, duh. Savings, retirement plans, college funds for kids, any of this could be impacted by a heart attack, cancer, stroke scenario, right? paint the picture that, hey, what you have saved, what you have put together, all this protection that you think you may have could be severely impacted by a cancer scare, heart attack, stroke, Alzheimer's, whatever. You got to paint that picture. It's an important discussion for your clients to have. If you have clients with Medicare supplement, this is just a complementing idea for you, right? And just a scenario and some stats for you that I think are useful. 3/4 of all stroke patients or strokes are occurring in people 65 and older. Well, that's obvious, right? That's the age. 67 and 70 is really when it catches up to us, but that's the age that health concerns catch up. 57% of diagnoses are over the age of 65. Yeah. And remember, the critical illness policy only goes up to the age of 65. The heart attack, cancer, and stroke one, you can do a lifetime one up to the age of 89. So you have a solution, even if they're a little bit older. Think about the money that they would need, especially stroke victims, for home modifications, right? A ramp, 0 to 2 showers, maybe one of those lifts that takes people up the stairs, whatever. So they're not having to spend the insane amount of money to move homes. Maybe there's some modifications. What would that cost? Again, paint the picture with your clients. Expensive cancer drugs not covered by this prescription plans. This is exactly what I was talking about for my brother-in-law. He was given an experimental cancer treatment. They took him off. Which one did they take him off? They took him off radiation. They kept him on chemo, and they introduced 2 experimental drugs. These 2 experimental drugs he took twice a month, and the total cost each month was like $1,600, and he did that for 9 months. So do the math, right? $1,600 times 9 months, right? That is an out-of-pocket cost because no insurance was going to cover that. And had we had some protection in place, that could have helped without a doubt. Life plans. If you're talking to a client about life, bring up heart attack, cancer, stroke. You got to, right? I get it every time. Heart disease does remain the leading cause of death in the U.S. Still horrible. Chances of dying of a heart attack are only 10%, but you're still impacted because you're going to be in the hospital after a heart attack, right? So you should probably have something to offset what's going to happen. And then there's some rehab time. It's not like you go have a heart attack, they fix you up, and you're on your way in a couple of days. It doesn't happen. There's some off time where you're going to lose time from work or whatever. So that's something important to think about. Number of cancer survivors in the U.S. is projected to increase to 22.2 million by 2030. Survival rates increase. Why? We're getting better at saving people from cancer, but the impact when somebody's diagnosed with cancer is already happening. So I'm very thankful that we're able to treat cancer better and we give people some more longevity behind it. But upon diagnosis, there's still that critical component that, okay, they didn't pass away, now what? Because in some scenarios, I hate to say that, but if they pass away, their family would be less financially impacted than if they lived. And that is just horrible to think about. So for me, I want something in place for my clients to protect them if this ever happens. It's the, hey, if this happens, we got you covered, right? How do you figure this out? And this is the big question that I get all the time. Don't guess. Don't guess at what your clients need. Talk to them about their finances. This does a couple things. It allows you to dig in deep with your clients and understand what the reality of their situation is, what it is they're trying to protect. This is at a bare minimum how I figure it out. For me, I'm doing a minimum $40,000 for every family, and then I'm increasing it or decreasing it based upon budget or whatever. Easiest way to figure it, right? Major medical out-of-pocket costs, about $8,700. You double that. 90-day elimination period for DI. Most disability policies, standard 90-day elimination period. So what you're going to do is figure out 3 months of lost wages, right? So you have your 8,700 times 2, and then you have, in this scenario, I said this person makes about $5,000 a month. I want to cover the elimination period. So again, 5,000 times 3, 15,000. Childcare. The reason I put childcare there, if you have somebody who has a younger family and they have kids, if they're impacted by cancer, heart attack, or stroke, who's the one at home taking care of the kids? And if they're not doing that, then who is? So for me, in this scenario, all I did is I doubled the major medical out-of-pocket costs. I looked at the elimination period, and I added childcare for 3 months, right? Lump sum, bare minimum for this, critical illness, 38,967. I'm rounding that up to 40. Ideally, I want 50. But again, depending on their budget. Again, these aren't expensive policies. Go play around with the quoting system. I'll take you through that here in a second. We'll actually do one, and I can show you that. But that is a good way. That's just one scenario, and that's typically what I've used in the past, and that's why I always paint the picture of 40,000 is a minimum. And then again, adjust it depending on wages and childcare, and if they have kids, they know things like that. That's an important part for you. Hold on real quick. I want to do something here. And that picture you just saw is of my grandson. So hopefully, let me fix this again. All right. Hopefully you guys can see this critical advantage portfolio. I'm going to take you to SPA here.
Yep, we can see it.
Okay. So you guys have all access to SPA. SPA is sales professional access. Come up here to products. Let me blow this up a little bit. That's a little small. Why am I 75? So weird. Okay. So come up here to products, all the way over here to critical illness. Pick your state. Your state will tell you critical advantage portfolio. Click on product details. This will give you a chart very similar to what I gave you, what I showed you in the beginning. So you can see what are the differences, what are the issuing ages, what are the amounts, what does it cover, all that stuff. This is real handy. Also, underwriting guide. Look at that. Look at this portfolio overview. But a couple of the key things that you want. State special matrix. Let's look at this. Remember, I kind of gave you guys a little bit of advice here that if you operate in certain states, make sure you know what you're doing here. National means that all options are available. Different states, like in this state, in this case, Arkansas, no cash value rider available, no coverage available if covered by Medicaid. Okay, cool, you know that. California, this is the one that, well, it upsets me a little bit because California should be better, but they're not. Maximum issue ages is 64 for all products. Remember when I told you that heart attack, cancer, and stroke, you can go up to the age of 89. In California, you can't, 64. No Alzheimer's disease coverage for critical illness, and they gotta have health coverage. So again, state special matrices will give you some restrictions on what you can offer and what you can't do. Let's look at New York real quick. There's New York, whole bunch of them. But here's the cool thing. You can still operate pretty effectively in New York with this, right? No term coverage. Okay, big deal. That means I got to put them in lifetime, which is typically better anyway. That's typically what I'm doing. Unless I have somebody who's older and really tight on a budget, I'm going to try and put them into lifetime coverage, much like a permanent life insurance policy, right? No return of premium. I don't worry about that. I don't use return of premium on these things typically. It gives you some restrictions. No blindness, deafness, paralysis, coronary angioplasty surgery covered for critical illness. Same thing for the heart attacks. Gotta have health coverage. Again, keep in mind just these different options for the states. It's important for you to know when you're talking to your clients about them. I usually have this sitting in front of me when I'm talking to a client just to keep me straight. If you're meeting with them in person, they're not going to care. It makes you look like a pro because you're literally have a reference material. You're like, look, I operate in a lot of different states and I got to keep this straight. Mutual's cool enough to put this together for me. So that's an important thing, that state special matrix. So again, coming back here, again, you can change the state. Sales tools are good, but I want to show you this. This is the other important part. Illustrations and quoting. You can do a full-blown WinFlex. You don't need to. No point in that. Right here, mobile online quoting. Again, quotes for sales professionals on your phone is one of the easiest way to do that. Or you can come right here and go to where it says online quotes. This is exactly what it's going to look like if you put it on your phone. No different. It's the exact same thing. You'll see all of our simplified issue products, guaranteed advantage, even has dental, Medicare supplement. It even has our fully underwritten term life answers and term life express. That's our simplified issue. So if you're looking at something here, critical advantage, click on that. What state are we in? We're going to do mine, and I'll just do a scenario for me. I'm an old dude, so you guys will get a kick out of this. I am 57 years old, individual coverage. I want a cancer plan. And remember I told you my minimum is 40. I actually have more than that because I bought a policy several years ago. But I just want a $40,000 cancer policy for me, 57. Lifetime coverage, paying monthly. You can add these riders, but in this case, I'm not going to. I just want to show you how easy it is. And again, for me, I'm keeping this whole scenario simple for my clients, right? Hey, you need this. we should talk about this. Calculate $40,000, $40,000, 62 bucks a month. So upon diagnosis of cancer, Mutual of Omaha writes me a check for 40 grand. Not a bad deal. Not a bad deal at all. And suppose I was on a budget. Suppose 57-year-old Kurt was on a tight budget. I'm still going to do something. What's 15 look like? $22. You can talk to any client, regardless of their budget, about this, right? You have options for them. Even if it doesn't cover what they should have just because of budget constraints, fine. I don't care. I'm still going to talk to them about it because that's important, right? Those are great ones. So again, a lot of great resources for you guys. And this is a good place to go to learn everything about our product. But for me, especially for this one, products, come over here to critical illness, pick your state, come down here to product details. And again, I love this table because it helps me keep things straight into what's what. A little bit of guidance from me. If they are under the age of 64, I'm going to talk to them about the full-blown critical illness package, right? For me, that makes sense. That's a good use of premium dollars. If they're over that, obviously I'm going to the other ones. That's where I start, but I'm also going to have a budget conversation somewhere in there. When I'm talking to my clients, and I say the same thing, and you hear me say this all the time about including family, friends, and clients, because it's true. And I want my clients to understand that I consider them close to me, because I do. I have 4,100 clients, and I know many of them personally quite well. When I'm talking to them, I want them to understand these things. So don't be afraid of having a budget commitment talk either, right? It's actually pretty straightforward. Hey, typically the way I lay this out is the majority of people have between 10 and 20% of their total income to devote to all their financial coverages, right? And I mean everything. Where do you fit in there, right? Have them think about what's the total amount that they do spend, right? That's a good starter, and I like that as part of a fact finder. It's a good place for them to start because they understand the realities of what a total package should cost. Now, can people spend more? Sure they can, but I don't want to scare them to death. And honestly, you've seen the prices here. Come at it from an angle where you understand what their budget is ahead of time, rather than just do a policy of something that they can't afford. Now you've scared them. Now you put them in a position to where they feel uneasy because you didn't do your homework first. Do your homework first, understand what their budget is, what they think, talk to them about how coverage works and what kind of coverage you think they should have, and then work the numbers from there. Don't just come up front without having a conversation. My 2 cents on that. And again, good place for you to be, really good place for you to be on that. I want to show you this as well, and I'll put this back up here so you guys got it. That's Cindy and I, all right? If you do have questions, if there are things that you want to know about, if you need some additional resources, don't be afraid to get a hold of us. We will always steer you in the right direction and get you whatever resources you need. Guys, that's what I got for you. If you have any questions, please let me know. I'll stay on the line here for a while and answer whatever questions you got. But again, don't ignore this portion of the insurance package, right? And again, think about it yourselves. Think about your family, and if you know anybody who's gone through heart attack, cancer, stroke. I guarantee all of you have, and your clients are no different. So that's important for them.
Kurt, thank you so much. This has been an amazing presentation, great products. You know, as we said, there are some questions, and I'm going to get right to those in just a second here. But as we said before, you know, obviously you can contract with these products through Crowe & Associates. Reach out to myself, reach out to Lisa or Teal in the office, and we can get you guys set right up. You know, Kurt was talking about how to position these products, and they can work right alongside Medicare Advantage plans as well as Med Sups. We talked heavily last summer about starting to diversify the products that you offer. And this was actually a really good find that they offer this in New York. A lot of our agents in New York have nothing that they can offer. And you did see the list of restrictions. So there are some rules to follow, but it's amazing for our New York agents to be able to have something to offer around these lines of business. So let me just pop open the questions here quick. And is it available in New York? Yes, it is.
Yep.
We did talk about the you showed your listing by state of restrictions and rules kind of thing. If you don't mind sending that over to me, Kurt, I will have it included with the recording so that people can have
sure.
that.
Yep,
That would be
absolutely.
great. That would be great. Next question, and Robin, it's good to see you on here. Hang on one second, let me get to these questions. When a beneficiary is diagnosed, what percentage of the policyholders receive a lump sum payout? Are there ways that one can be refused a payout?
Yeah, if they are diagnosed with a not unqualifying condition. Let me give you an example. Malignant cancer is the trigger for cancer policy. If they are diagnosed with some type of simple skin cancer, that's not in the malignant cancer, all right? But the diagnosis needs to match a covered condition.
And
Obviously,
do they still qualify for the policy if they're diagnosed with something else, like some other type of cancer? Do they still qualify to keep that policy?
say that again. I'm sorry, I just want to make sure I understood.
If they're diagnosed with a cancer that's not a qualifying cancer, are they still eligible to continue on that policy?
Oh, yeah, absolutely. Because think about it this way. This works much in the way that life insurance works, right? That once you're issued a policy, whatever happens to you health-wise after the fact doesn't matter. It doesn't matter. It's based on the underwriting criteria at the time of issue. So you could literally have multiple things go wrong with you after issue. You're still covered. This is not one of these things where it's based on health and underwriting activity from the day you get issued it forward. It doesn't work that way. Matter of fact, I can think of very few policies that work that way, but it's based on at time of issue, what was your health? Okay, cool. If we're comfortable with it, we're going to issue that. Then that's it. So then no matter what happens to you, you're still covered for that policy, however you had to set it up, whether it's a term or a lifetime coverage.
Okay, cool.
That's a good question, though, because a lot of people confuse this with, they think that it's being like continually underwritten, and it's not.
Gotcha. Can the lump sum be increased after the policy is issued? So if you ask for 40, in 5 years, can you increase it to 50?
No, because the underwriting criteria is based on at time
At the
of
time issue. Yep. Okay.
Yeah. Now, could you go back and write another one at that time to kind of stack them? Yeah, but you'll be limited to $100,000 total coverage ever. So could you have multiples of that? Yeah, but again, it's going to be based on attained age and other things at that time. Yeah, you can do it, but no, you don't. This is one of these, and there's instances in life insurance where you can do that, but this is one of these because of the way it's underwritten and because of the way it's priced that we don't allow that.
Gotcha. Someone's asking about commissions.
Not your guy. Talk to your managers.
Yep. Okay.
I don't know anything about how you guys are commissioned.
Yep, that's fine. We can talk about that offline. Someone said if you had skin cancer, would you still qualify for one of the cancer policies?
Sure, you could. What I would do is find out what kind of skin cancer and then give me a call and let's talk about it first. We may want to do what's called a pre-qual, just so I understand it. Just to be certain, because there are certain types of simple skin cancer that's not going to be a thing, but there are other ones that may give us some pause, but that's something to talk about with me for sure.
Okay. Let me see if there's anything else in here. Give me 1 second. Someone said, thank you very much. Great presentation. And that's it for the questions so far. Is everybody, and we'll check for another minute or so here, but looks like that's it for our questions right now. Just a couple of side notes. You guys know, most of you know anyway, about the programs that Crowe offers, which are specific to Crowe. We offer our $500 a month lead reimbursement program. That's for the Medicare sales. And then also our T65 seminar program, which is turnkey. And it does, we do pay half of the cost for your first seminar for the vendor fee. If you guys have more questions about those things or you're not familiar with those, please just reach out, like I said, to myself or to the office. Lisa is there and Teal is there as well to help out and answer any questions that you guys might have for us. If you do want to get contracted, also please reach out. We're happy to get you guys started. Like we had said before, it's really important right now to start diversifying and adding to the products that you have to offer your clients so you can really round out what they need. Kurt, thank you again for coming out and joining us today. I can't tell you how much we appreciate it. It really was a great presentation. There's several comments in the notes or in the chat that you did a great job and they really enjoyed the information. So I'm sure we'll probably have some questions for you after
That's why I encourage that. And by the way, I didn't know you pay half of seminars. Where do I sign up?
Yeah, so our T65 seminars, which, I mean, with the changes in Medicare, everybody's going to be looking for enrollment periods, but the T65s are the one that everybody wants. So we'll pay half of the first
Back
one.
into personal, let's talk offline. Maybe I need to get back into personal production.
You want to start selling some Medicare? I got you. But thanks again, Kurt. We appreciate having you here. Thank you guys all for attending. That recording will be coming out to you in the next day or so. So I'm going to go ahead and close it down because there's no more questions. Everybody has a safe day. I know it's icy and cold, but please stay warm and stay safe. Take care, guys.
Thank you.
Thank you, guys.
Bye, Kurt. Thank you. Bye, Lise.
Bye.